Hey, Frank, what's happening? It is July 12th, 2026, and I got an action-packed episode for you all today. What I want to start with is this chart of the market, SPY. This is a one-day chart, and as you can see, there's not a whole lot going on here. There's just the RSI and some volume bars, and just looking at it, you can see that wow, we are approaching all-time highs again. Are we going to break them? Are we going to bounce off of them? I don't know. Let's see. So what I want to show you first is something I use as a checkbox to get into and out of trades. It's not a reason I get into a trade solely. It's not the sole reason. It's more like an additional conditional I use to get in and out of trades. What am I even talking about? It's something called the ATR, or average true range. And I'm going to explain it and why I think it's important. But first, how do we get to it? So if you go up to here to indicators and you type in ATR, you'll see it says average true range. Go ahead and select it. And it'll default to this red color here. So we're going to make this a little bit more apparent. I'm going to go to yellow so you can see it better. And what is this and why is it important? Okay, so let me explain it first. Average true range is the average candle range for the last 14 days. Okay, so you can see here at the bottom it says 923. So 923 is the average range of each of these candles over the last 14 days, or the last 14 candles. The cool thing about this is that when you change the chart time frame, let's say I go to 1 hour, it's now going to represent the last 14 hours. And you can see the ATR is now reflecting that. It's 1.34. If I go to the 5-minute chart, right, it's going to represent the last 14 of these 5-minute candles. If I go to the 1-minute chart, it's going to represent the last 14 minutes. Okay, so that's the definition. We're just doing definitions now. Now, how do I use this as a conditional? I'm going to give you an example. We're going to start with this idea of there's a strategy that's employed in trading called double top or double bottom. And what that simply means is that if the price hits a top and then retraces over a period of time and then comes back and retests the top, that could be considered a level to go in maybe short again if you're thinking about coming up, if it's coming back up to a top. The same thing is like, let's say the price is, gone up, and it comes back to a bottom. It could be a bounce, right? But we're thinking in terms of short here because this is an all-time high. So how does ATR get used as a checkbox in the scenario? So how I use it, and this is just my own personal preference, I want to see the move. It's going to be on Monday. I want to see the move to be more than the ATR for me to want to even consider going short at that double top. So meaning, it looks like the price closed at 754.95. So let's say, for instance, the market opens at, let's say 749, right? So from 749 to 160.40 is more than the ATR of 923. So I would say that checkbox, that conditional would be checked, right? There's others that I'd want to consider as well, but that at least that checkbox would be checked. Now, let's say the market opens at like 758, right? And it's like 2 points away from the all-time high. Nope. Conditional not right? Because it's too close. My experience has shown me with trading is that if it's too tight like that and I'm trying to go short, it could actually blast through and I'd be out of the money, come up and hit my stop. I feel terrible. I'm having to drink extra coffee. Yeah, it's going to be a mess. So I want the move to be more than the ATR. And that's not just a double top, but any indicator I'm targeting, right? Whether it's a pivot, a moving average, Fibonacci, I want the move to wherever I'm targeting to be more than the ATR in with whatever time frame I'm trading in. So if it's a 15-minute chart, right, I want that ATR to be, I want the move to be more than the ATR for me to feel comfortable at least considering the trade. It's it's not the sole reason I get into and out of things, but it's a conditional checkbox that I use. Okay, so that's just a little insight into what I look for. Okay, moving on to the E-minis. So this is the S&P futures. Why I watch these is because this is what I actually trade on the daily. So I use something called prop firm accounts, and I trade typically on a 5 to a 15-minute time frame, and I'm trading S&P futures contracts. Okay, so I've had these trend lines here drawn since the beginning of time, and this here, this bottom one represents support. The top trend line here represents resistance. Now you can see we've broken through. So let's analyze this a little bit. Now I'm going to show you something, a concept about trading trend lines. So with trend lines, and this could be the same thing could be true for moving averages or any other indicators. This was resistance for the longest time, but look, price action came and broke above, consolidated and kept going, and then later on came back and became support. That is very common. This is actually a textbook example of this was resistance, broke above it, came up, and then look at that, hit the line and then bounced, right? That's a textbook example. It also works the other way around. So meaning if price eventually, if it comes back and breaks this and starts trading sideways and then comes up, it could hit this and treat it as resistance before a further move down. Now, where are we? We are actually above this trend line here, this newer one that I've drawn starting on June 15th, and it looks like the price closed above. Does this mean that we're just going to go rip-roaring higher? Not necessarily. What I would like to see is some more consolidation, and then it could come back and hit this and then continue. Now, this is a big if. So to me, my opinion is that this is looking like a bullish bias. So to me, this is more of like a weather vane. This does not necessarily mean that we're just going to go ripping up into 8,000, but the likelihood, it seems more likely that in the near term, we're going to be going up than coming back in. But again, we still need to see what the next few days show us, right? The market hasn't really kind of shown me its hand, so I wouldn't necessarily be buying calls anytime soon. So this is just kind of a watch and see thing. Okay, moving on to SOXX. So one of the things I pointed out in the last video is that this is a weekly chart here, and you see we had this big old, we had this trend up and then this steeper staircase trend up, and then it culminated in this candle here, this big old bearish engulfing candle at the end of a move. This is a textbook example of a reversal pattern. When you have a big old bearish engulfing candle at the end of a big strong uptrend, that indicates further downside. Now, where can we go? So let's take a look here. Let's analyze a little bit here. So SOXX, we could start the move. We could start it here, or we could start it here even, right? So let's start it from way back yonder and then see what we get. So we'll switch over to our daily chart. And you can see we've already tested. Look at this, right? We've already tested. We came in, we've drawn from here. So if you had that fib and you got in here at the 236, you would have been right? So you got the bounce off the 236, moved up, right? And it looks like it's hovering above. Could the 236 be another bounce? Yeah, but keep in mind something. The more a level gets hit, the weaker it becomes. So just keep an eye on that for now. And let's go over to Micron. Let's take a look at that. And here's an example. This was actually something in the last video I pointed out, which I mentioned that any of these Fibonacci's could have been retracements, right? And if, sure enough, look at that. On July 3rd, I think the last video was, that would have been around here or so, right? If you would have taken this long at the 382, you could have had this big old boss move of getting in long here, right? Came within $3 and then getting out at the 236. That would have been about 140 points. Not bad. Now I know what some of you are thinking. Yeah, Mr. Monday morning quarterback, easier to point this all out now in hindsight. You're right. Absolutely. But what I'm saying is that the level was there the whole time, right? Again, it was drawn from here to here. If you would have just had a limit at that 382, anytime after here, you would have been right. So do I think we're going to get another bounce off the 382? It's possible. But just keep in mind, it's already hit it once. It came close another time. A third time, you're kind of pushing your luck. So doesn't excite me. It's sort of like I'd give it a B minus, C plus, or maybe a C even. So it's an average. I wouldn't put too much into it, but you could get a bounce off of that. What I like better is the 05 right here, because you have this gap fill here and that green line is right there. Even better, the 618. Okay, let's move on to Intel. I'm going to give you the Intel on Intel. So this is let me show you why I got this, what the rationale behind this Fibonacci was. Okay. In fact, let me delete it and I'll show you what I'm thinking here. Monthly chart here. And then look at this here, right? For a good solid year, $19.25 looks like it was like the support for like a good solid year. So what I'm thinking is that probably is a good spot to draw a fib retracement from as like a support. Then I'm going to go to the top here. So from bottom to the top, and then I'm going to switch over the daily chart. And then immediately what catches my eye is this 618, right? Right here in this level here. Oh, wait, I need to be, yep, there it is. I was on a 4-hour time frame there. So you can see you had this gap fill, and look at that. There's this cluster of price action here right at that 618. And then let's put on the pivots. And then look at that. You got an S3 right there, $1 above the 618. So 1, 2, price action here. I would consider this triple confluence, right? So yeah, you could get a bounce off the 382, the S2, the 05. But what would be really cool if it gets there, big if, is this here, the $66, $67 range for Intel. I would feel pretty confident about that. And then beneath that, you have 45. But this situation here looks good to me. Last and not least is Bitcoin. I'm going to show you, this is a standing Fibonacci level I've had. I've drawn from the low here to the top here. And then the 618 looks like it's been holding. It held last month. It's holding this month. This here is, to me, a line in the sand. If we break this, I think we're going down. Where could we go from here? So immediately catches my eyes is 05, right? 70,846, the 382. These could be resistance levels here. We could put on some pivots and see if we have any coordination, any confluence there. I don't see anything lining up, but yeah, I mean, you have R1, 69,000, 05, R2, 382, and R3. So Bitcoin does have some work to do, has some homework to do before it could go even higher. One last thing I want to show you. Oops, I didn't mean to do that. So I'm going to get rid of this. I'm going to do this here. In fact, I'm going to go ahead and delete this because we're getting kind of crazy here with the indicators. Okay, so this is an auto indicator. Okay, so take this all with a grain of salt. But what it is showing, what does look compelling to me is this falling wedge, right? Falling wedges are actually bullish, patterns. So it does have some work to do. It has to get above the top of this wedge here. So above 73,000, let's say 73,500 before we think about these target levels, right? So it's targeting this. So it's targeting 107 and 120 again, but it has to put in some work, right? So falling wedge is a bullish pattern and a rising wedge is bearish, right? So keep that in mind. I think that's going to be about it for today. I think that's enough classroom setting here today. I hope you have a good week, and we'll do it again next time. Take care.